I'm going to highlight two undervalued growth stocks you can buy now. I'm also going to highlight why these stocks are undervalued right now, the risks that are making these stocks undervalued. I'll share with you my proprietary discounted cash flow valuation models for these two growth stocks, which calculates the fair value of the stock and compares it to the current market price to demonstrate the undervaluation. I'll also look at valuation on another perspective, looking at their forward price to earnings multiple. I'll do all that in this relatively short video, so let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So the first undervalued growth stock I'm recommending here is Upwork, the gig economy platform. The intrinsic value per share I calculated for Upwork is $20. The current market price is $15, signaling a roughly 33% undervaluation. As I mentioned, I'll share with you why this stock is undervalued right now. And the primary reason is artificial intelligence, or I should say, the rising effectiveness of artificial intelligence. Investors are concerned that the reasons why people go to Upwork to hire gig economy workers are going to be reduced as a result of rising effectiveness of AI. People feel that the businesses will just go to large language models like ChatGPT to get their needs serviced instead of going to Upwork to find people to serve their needs. And while I agree that might be true to some degree, I think that's also going to be offset. So for some jobs, of course, it's going to be replaced by artificial intelligence. For some cases, people, instead of going to Upwork, can just go to ChatGPT and get the thing they need done on ChatGPT. But there's going to be a lot of other cases where you're going to be more interested in going to a platform like Upwork. You're going to want to look for those gig economy workers that are using AI and can provide you these services. Furthermore, the workers that incorporate AI into their services and can deliver better value to the buyers can become more attractive. So for the same reason, the businesses could have always went and done these jobs themselves instead of going to Upwork and finding somebody to do the job for them. But they go to these platforms because it allows the person to do more valuable activities rather than doing these jobs themselves. So similarly, just because somebody can do something on a large language model doesn't mean they're going to want to do it themselves. They might go to Upwork to look for the person to use the large language platform to get this job done. And so if these gig economy workers can incorporate AI into their services and become that much more valuable, maybe because it's faster to do the job on the large language model, maybe these gig economy workers can lower their prices and thereby become more attractive to small businesses looking to hire individuals. Longer term, I think the bigger tailwind here is that for businesses, it's a more flexible way, a less risky way to get things done. Instead of hiring a worker full time to join your company, you can give a contract for specific jobs. And if you see demand for that specific job continues for your business, then you can think about incorporating the individual full time in your company. So it's a way to get someone a bridge to get some work done without hiring somebody, because hiring somebody in many countries is a cumbersome process, and letting go of somebody is also a cumbersome process. So this allows that flexibility. Previously we had temporary agencies, temp agencies. I worked for a temp agency when I was 15, 16 years old. And that was one way to get into the workforce and kind of blend your way into the workforce. But those are becoming more and more difficult to incorporate into an operation, especially if you're a very small business and you need things to be done. These gig economy platforms are a very flexible way to do that. And then on the other side of the equation, it offers convenience for the workers, right? Some workers prefer to have that flexibility to work as many or as little hours as they choose, to take as many days off or work as many days as they choose without needing to get permission from a supervisor or a boss. And so, on both sides of it, the equation, it offers so much more convenience, lower risk, and I think that tailwind will be stronger than the potential headwind from artificial intelligence. Now, I say potential headwind from artificial intelligence because I don't see this as a one sided risk. I don't see it as only downside. I see it as something that could be an upside as well as downside. It does add risk to the business, to be sure, but it's not necessarily a one sided risk. There is also upside from artificial intelligence for Upwork. The second stock I'm going to recommend, and you were probably thinking about it as I was talking about Upwork, is Fiverr. Fiverr is another gig economy platform, very similar to Upwork. Upwork focuses on more larger business clientele, not very large businesses, but certainly larger businesses than Fiverr focuses on. Fiverr focuses on smaller jobs, less corporate focused, whereas Upwork has that more corporate focus, more corporate clients. And so it's another way to play these same trends. And the reasons why Fiverr stock is undervalued are the same that why Upwork stock is undervalued, given the risks from artificial intelligence, and the same reasons why I like Upwork stock, the same reasons why I like Fiverr stock. Intrinsic value I calculated is $40. The current market price is $34. So I see significant undervaluation in Fiverr as well as in Upwork. So I mentioned I'll share with you a different valuation perspective. And I got this chart from finchat.io. I get a lot of my data from finchat.io nowadays. They save me so much time in looking for the data I need to complete financial analysis. I've partnered with them to offer a 15% discount to all of my viewers that do your own research and you want a platform that you can go to get all your financial information. FinChat does that. And so you get a discount. The link is in the description. So I found undervaluation when I looked at Fiverr and Upwork when measuring based on my discounted cash flow model. But I also find significant undervaluation when I look at the forward price to earnings ratio. They're trading at forward PE ratios of around 13, which is near the lowest they've been, going all the way back to January of 2023. And again, it's due to the risks from artificial intelligence. How much do you think, how negative do you think that's going to be for the company, right? And in my opinion, my estimate is that it could be negative, but it can also be positive. It depends on how the technology evolves and how the workers, the gig economy workers on the platform, are able to incorporate AI into their services. If they can incorporate AI into their services and become more effective, be able to perform the same service at a lower price, or to be able to perform a better service at the same price, then business owners are going to look to these platforms to get people on there because they are more productive at the same price. So you're getting more value for your dollar. And so that could be the upside. And of course, the downside is very clear to everyone. The downside is that these small business owners, instead of going to Upwork or Fiverr, just go to ChatGPT or some other large language model and just type in the thing that they want done and have ChatGPT do it. And so that's the risk. I think those risks are overblown in this case, while acknowledging that it has made these two businesses riskier overall. But I think the undervaluation, the risk versus reward, is worthwhile for long term growth stock investors. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.